Hello everybody, welcome to the Fundamental Analysis webinar here with AvaTrade. My name is Troy, I'll be presenting. Keep in mind as we get started that there's risk involved with each trade that you take. So in one way or another, you want to make sure you manage risk in a way that makes sense for your risk tolerance and your profit goals. And we'll go over some ideas in that regard if we simulate maybe a trade or two today using some of the special tools in the order window in our web trader and app that make the risk management calculations very simple for you. And also keep in mind that what we go over is not meant to be financial advisement, but is coming from an educational perspective. Now, from our main website, we have the ability to log in the upper right corner to our web trader platform. And this allows you to trade on your MT4 and MT5 accounts from one location. And also the same features that you'll see in our web trader are free signals and the fundamental news that's coming in. All of the extras that you find in our web trader are also found in our mobile app. And so if you tend to trade on the go, you can use the AvaTrade app, which is found in the major app stores. And like I said, has the same functionalities and features as our web trader. Now, from within the web trader, we can start to look at some of the fundamental analysis tools, since that's our focus for today's session. We will also look at a bit of technical analysis if we want to look at some potential trade opportunities once we look at the fundamental news. The technicals really help you with your entry points and exit points once you decide on directionality, maybe based on the fundamental news. And if you have any questions, please feel free in the chat box to go ahead and pose your questions, or if you want to give any input. Now, from the side toolbar here, we can go to the discovery section, which has a number of technical and fundamental analysis tools. And where I want to focus starting out is the economic calendar. Now, those of you who've used economic calendars in the past, you might think, okay, interesting, but what's the big deal? You can look at an economic calendar in a lot of places. The point about this economic calendar is it has some data crunching capabilities built into it with some advanced tools. And so I'll demonstrate that for you now with some upcoming announcements that maybe you'll be interested in trading on. And so if we pick today's date, it's a good place to start. And by the way, you can filter the economic calendar based on the level of announcement importance that you want. I've selected only medium and high level announcements. They tend to move the charts, the prices on the charts a bit more than the low level announcements. And then you can choose the countries that you're interested in seeing the announcements from. Maybe the more major economies you're interested in more than some of the smaller ones. Now, coming up out of the US today, we have manufacturing data and jobless claims. Now, what I've noticed in analyzing this data over the past months is that jobless claims data seems to be a stronger focus when these two announcements are coming in at the same time. And so if we take a look at the jobless claims prediction, okay, this column shows that the last numbers were at 217,000 initial jobless claims. That's people applying for unemployment benefits, people who've lost their jobs. And the expectation is that will have gotten a bit worse. So in this case, a higher number is bad news because we're talking jobless claims, not new hiring. So if this comes in lower than expected, that would be considered good news, and higher than expected would be perhaps bad news for the view of the US economy. And if it comes in as expected, that's already a worse number than the last time, because it's expected to go up by about 7,000 more initial jobless claims than the prior numbers. Okay, so we keep all of that in mind as we use these advanced tools. If we click on the volatility tool, we can take a look at the last announcements, the last numbers that came in for this announcement on the charts. And what kind of movement did we get on different currency pairings for different time frames after those announcements came in. So all of these are past dates that the initial jobless claims numbers came in. And we could say, well, what if we look on the Euro USD or any currency pairing that's listed here against the USD? We can pick the time frame we want. I'll leave it on 4 hours after the event. So if I want to look at Euro USD 4 hours after each of these events, and I want to qualify how the numbers came in, for example, if this came in worse than expected, meaning above forecast, okay, more initial jobless claims than expected, what happened in the past? Well, 100% of the time in this data, it only happened twice, but each time that it happened, the USD strengthened and pulled the euro down. Now you might think, well, why would that be? Well, the USD sometimes is a safe haven when there's fear. So that could be one thing. People selling stocks and buying the US dollar. That's speculation, right? What this tool does is it shows you what happened, doesn't tell you why. We just know that when these numbers came in above forecast in the past year or so, both times that it happened, the USD pulled the euro down. And the range movement was about 36 pips. Okay? And we could say, well, what happened in the first 5 minutes? They actually went down less or even went up. Okay, so it's not like after you see the numbers, you miss the opportunity to trade. Okay, in this case, it either went down very little or went up about 13 pips in the first 5 minutes. But after 4 hours, both movements were down in the red between 5 pips and 12 pips down. So how do we get a range of 35, 36 pips? Because the range was up and back down. So catching the high point in this case after this announcement was a false move that you could get a nice entry point, technically speaking, to then short it if you expect after 4 hours it's going to drop with this bad news on the initial jobless claims. Okay? Just different ways to analyze the past movements to get an idea of how you want to trade based on that past technical data from these fundamental news announcements. So this is where we're combining fundamental news with study of the technical movements on the chart. Okay. Now, what if this came in below forecast? All right. The opposite. Now, it's not 100%, but 63% of the time, the movements went up. Okay. So went up 1, 2, 3, 4, 5 times, went down 3 times. Now, you can start to look and say, well, what about after 1 hour? 50-50 after an hour. What about in the first 5 minutes? All of them were down. So again, in the first 5 minutes, the reaction to these jobless claims was a false move because of what we see is they all went down in the first 5 minutes, 88% of them. After 4 hours, 63% of them were up. You'd have profited on all of these green ones because in the first 5 minutes, they all went down, except for one. Okay, so very interesting to analyze the data on the initial jobless claims. It seems in the first 5 minutes, the first move has been false the majority of the time, and the real movement that would occur over the following hours occurred in the opposite direction the majority of the time. Okay, so you can start to get an idea that with this announcement, there's an initial reaction one way, depending on how the numbers come in above or below forecast. And then there's a movement after that initial time period back the opposite way in a larger movement. Okay, so this gives you a plan going into the initial jobless claims announcement that if you like that past data, if you think it's strong enough to help you predict what will happen, now you can put together a trading plan for when those numbers come in. If it comes in above expectation, I'll wait 5 minutes and trade one way. If it comes in below expectation, I'll wait 5 minutes and trade the opposite way. And why are you waiting 5 minutes? Maybe because that's what the data showed. In the first 5 minutes, it was a false move. The majority of the time in the past. Doesn't mean you'll win every trade like this. But if you try these strategies on specific announcements, say 10 times, 15 times, as these announcements occur each week and each month, then you see, okay, which strategies are working best for me? And now you have a go-to strategy for specific announcements each week that you know you like to trade on and that you've demonstrated you profit more than you lose. Okay, so this is one way to trade fundamental news is with announcements. And you get the benefit of hindsight, meaning you can see what the numbers are then trade the strategy based on how the movements occurred with the past data. And some might refer to this as data-driven trading. Okay, so you act more like a robot without emotions and without guessing, just based on those past movements that are surrounding these fundamental news announcements. Okay, and obviously if you're taking a trade, you're going to risk a small fraction, likely, is what you're comfortable trading of your overall equity. I mean, you can trade the amount you want, right? But it probably makes sense to have a set percent amount of your portfolio that you'll risk on each trade, and then see how it works out after 10 or 15 or 20 trades for each particular announcement that you might like. You know what? I wanted to show another announcement as well. Let's go back to the calendar. Tomorrow, there's some nice ones coming in that you might be interested in. I scoped out some of these. The retail sales year over year out of Great Britain, high level announcement, seems to move the charts a bit more than the month over month. I've studied both of them, and if you look at the retail sales year over year, this comes in tomorrow out of Great Britain. If this comes in above forecast, we've got 63% of the time up. Okay, so basically 2/3 of the time rising compared to the drop. So if you try this 10 times and you win 2/3 of the time, if this comes in above forecast, you get a good entry point and buy. And after 4 hours, you win 63% of the time. That would be a great win percentage, really. And you can see in the first hour, okay, it already made the move. In the first 5 minutes, the range movement's only 11 pips, okay? 11 pip range movement. And after 4 hours, range movement 41 pips, okay? A number of these are 30, 40 pips up. So you have to play with the timing and which announcements you think show the strongest statistics. And you could do this over the weekend for the upcoming week each week, and know the exact times and announcements you'll trade for the upcoming week in advance. If this comes in below forecast, it's the flip opposite, right? 2/3 of the time it drops. So it's almost never 100% of the time, right? So you can't expect to win every trade. But what we're looking at are trends. And if this comes in below forecast, 2/3 of the time, it went down. If it comes in above forecast, 2/3 of the time, it went up, approximately 2/3 of the time. Okay, so some interesting statistics you can see surrounding these announcements. Okay. What about out of Germany? We've got the GDP growth rate. Again, we've got year over year and quarter over quarter. And so you can analyze those differently and see if there's any better number to follow. Those are coming in at the same time. So if it's above forecast, the euro strengthened. One only happened once. The euro strengthened when that happened, pretty significantly. If it's below forecast, it also strengthened. So what that tells me is this announcement's not driving the movement. Regardless of how it came in, the movement went up. So in this case, I wouldn't be interested in trading on that. Maybe the quarter over quarter numbers are different, but you can check both and see. But sometimes you look at the past statistics and it confirms that maybe you don't want to trade on a particular announcement. And that's what I see out of this one. There are some others. Manufacturing data out of Germany that might be different. So we look above forecast, 75% of the time, if this comes in better than expected, higher than expected on manufacturing PMI, then the euro strengthens. 75% of the time, it's 3 out of 4 times. And the one that dropped barely dropped. And the ones that went up 3 or 4 times more than the one that dropped. So not only did it go up 75% of the time, it went up further than the one that went down. So that's a nice 32, 33 pips potential profit range movement on this announcement 75% of the time. If it comes in below forecast, look at the opposite move. 75% of the time exactly, it went the other way, okay, with over 30 pip range movement. So this tells you that there's for sure a relationship around this announcement. At least the statistics show a high probability that there's a relationship with this announcement and the movement. 75% of the time down if it comes in below forecast. If it comes in above forecast, the exact opposite. 75% of the time it went up. Okay, so this one I would be highly interested in myself, paying attention to how the numbers come in and perhaps trading on it if I like my entry point in those first 5 minutes. Okay, so I've found 2 or 3 I'd be interested in from yesterday and today, the announcements coming up today and tomorrow, and I found one, this GDP growth rate, that I wouldn't be interested in paying attention to trade on. So you start to get a feel for these announcements and which ones in the past have created predictable movements based on the statistics. We also can look at the Canadian retail sales month over month, year over year. I've seen some strong responses to this data. If it comes in above forecast, the Canadian strength, 75% of the time, pretty obvious trend. If it comes in below forecast, the Canadian weakened. 67% of the time, 2/3 of the time. The ones that dropped were very little, the ones that went up were a lot more. So an obvious trend here surrounding this announcement. Okay, worse than expected data, Canadian weakens. Better than expected data, the Canadian strengthens in the 5 minutes after. Okay, what about, that's for short-term trading, right? What about if I'm looking at 4 hours after? 75% of the time still. So it started in that direction and it kept going in that direction. Below forecast, same thing. Still, after 4 hours, it's up 67% of the time, a nice distance, 45 pips. So in this case, the first movement was not a false movement, but it was smaller. Okay, 45 pips after 4 hours. In the first 5 minutes, average range movement, 8 pips. So you had time to get in those first 5 minutes, and it carried another 30 pips or so on average with the range movement. Okay, so very strong tool here to help you with trading on announcements and being able to selectively pick which announcements show the most predictable statistics from the past numbers that have come in. Okay, I'll pause for a moment. Any questions on this economic calendar before we move on to another fundamental news tool? Okay, and if I see any questions pop up, I'll go ahead and address them as I see them. Let's go ahead back to the market buzz, or I'm sorry, to the discovery section, and go to the market buzz, which is found within the discovery section. And this is another fundamental news tool that really gives you information that you might find on your own, but it might take you hours to find. And so this is information that is compiled into one place for whatever instrument you're thinking about trading on. And so why is NVIDIA the biggest circle here? Well, they just had their earnings numbers yesterday after the market close. That's the US market. And the numbers weren't as good as some had hoped. Now, it's funny because the numbers came in better than expected for both earnings per share and revenue, but NVIDIA has done so well in the past months and couple years, really, that investors are expecting the numbers to not just be a little bit better than expected, but to be 25%, 50%, 80% better than expected, which is what they had been doing for several quarters in a row. And so when the numbers came in just slightly better than expected this time, I guess the traders are spoiled with NVIDIA. That actually was viewed maybe as negative. And so the technical trend still shows that the price might rise in the short term, but we see it in the headlines straight away. Stocks slip before the open on NVIDIA's disappointing forecast and Ukraine jitters. Okay, so jitters about what will Russia do about Ukraine using long-range missiles, which has nothing to do with the earnings numbers from NVIDIA yesterday. That would affect the entire stock market, right? Not just NVIDIA. And then also specifically about NVIDIA, they're saying that these numbers were disappointing in terms of their forecast moving forward now. So you can click on this and see there are some concerns about the supply chain, perhaps. Not that NVIDIA doesn't have demand, but can they make the chips fast enough to keep up with the orders and also with the expansion that they're looking to do with new products. And so as we look at this, you can read the entire article and see where it came from and what the article tells you in detail about NVIDIA and the market in general.
And then you can move on to other articles that are about NVIDIA. Here's another one, NVIDIA stock slumps despite Q3 earnings beat. That's exactly what I was saying. They beat the estimates, but not by enough, I guess, for a lot of investors. And so you can click on that article and read it. It gives you a synopsis, or you click and read the whole article. So within 10, 15 minutes, you can see the most recent news about whatever instrument you want to trade on and have an idea as to whether you'd want to follow, for example, the trend analysis. In this case, I feel like the trend analysis was based on technical analysis that was looked at maybe before this most recent news came out, because the two articles we just looked at are working against this rise. So in this case, I would avoid this signal and look on the chart to see maybe there's an entry point. If this does go to this resistance level, it's expected to rise up to this price here, according to the technicals. If it gets anywhere near there, I'd probably be in a hurry to short it based on the recent news, the articles I just read, and put my stop loss above the resistance. So I might use this signal for the technical analysis to say, yeah, maybe I short it, depending where's the price at the open today when NVIDIA is tradable once the US market opens. If it's anywhere near this resistance, I probably would look based on the recent news to short it and put my stop loss above this take profit zone on the buy signal. Because they're saying buy here because they thought maybe it might not go past that price. So if you're going to short it, it makes sense to get your stop loss above that resistance level. So sometimes by reading the most recent news, you can avoid following a signal, a trend analysis that maybe isn't going to come to fruition because the most recent news perhaps is working against it. So sometimes you'll see that they agree. Sometimes the trend analysis here, let's say the trend analysis said sell, that the price might drop a certain percentage, and then the articles were negative as well, and those two things agree, then you're more certain that you want to trade on it. Here you have conflicting information. You have articles that are negative for NVIDIA, but you have a trend analysis that says it might go up 12%. So in this case, sometimes you sit it out. You wait and see, well, what's going to happen? Maybe the trend analysis changes. And so sometimes this tool convinces you that maybe you don't want to make a trade, or maybe you want to make a trade in the opposite direction of the signal on occasion, okay? But again, very powerful information that you can find in a relatively short period of time using these built-in features that are in the web trader and our app, okay? Now, it's not just stocks, by the way. I can see what's the latest with cryptocurrencies. For those of you that live in any region where we're allowed to offer you cryptocurrency trading, no wonder Bitcoin is trending the most. Why? Well, it's breaking all-time high after all-time high. It's headed towards 100,000, it looks like. I think it just broke 98,000 just before I started the webinar. So it looks like it's got a magnet trying to pull it towards 100K. We'll see if it hits today or not, but it looks like it's trying to do that. The trend analysis, price may rise 21.1%, okay? We can start to look and see what kind of articles are here in different categories, okay? Sometimes you have to enact these categories to the side to see all the articles. And, you know, it wasn't that long ago, there were articles about Donald Trump's platform with him winning the election in the US, that he's more pro crypto and pro Bitcoin than the other side was that lost. And so that's helping to create a Bitcoin rally. And if you had read those articles that were here last week, that might have gotten you in on the surge that already went up, okay? You can see the power of what's happening here with the news helping you to decide maybe to follow a trend. In this case, it says the trend may rise 21% and the articles are positive. So now they agree. So maybe this helps convince you what you want to do. This article says the Bitcoin rally does not seem to be stopping anytime soon. Does this spell good news for Indian markets? Okay, you can start to read these articles and see for yourself what's the news out there combined with the trend analysis, and do I want to follow this signal here or not, where it expects it to rise towards these new all-time highs of even 111,000, which is just amazing if it can get there, okay? So we can look at also commodities, indices, and the currency pairings with this tool as well. Okay, let me pause for a moment, see if any questions again. Okay, I don't see any questions popping up. If they do, again, I will address them. Okay, so after doing your fundamental review of things, let's say you decided you wanted to make a trade on something after we just looked at the announcements and the news articles, etc. And maybe you decided you wanted to trade on Bitcoin, assuming it's allowed in your region, right? And I'll go through it, and it could be any instrument. I could pull up NVIDIA, but it's not a live chart yet. So that's why I'm using the Bitcoin chart. But it's the same concept based on the fundamental news we looked at and the technical trend, the signal that was there with the trend analysis. Now I can combine those and try and find an entry point. So if I decide, okay, indeed, I want to follow that trend prediction that this could reach higher than 100K, it showed 104 to 111,000. So now I just have to look for entry points in risk management. And so maybe I like the fact that this pulled back, and I think, okay, I see that this could be a spot. If it pulls back, it might find support, because this was resistance, resistance, resistance. It broke above and became support right here and jumped up further. So if this comes back down to say 97,650, maybe I'm looking to buy. So I'll do a pending order in this case as an example. Now, why am I simulating buy? Because the trend analysis showed it expects to keep rising, and the fundamental news all looked positive from the articles. Let's assume we read several of those articles and it convinced you that, okay, yeah, good news for Bitcoin. So we'll assume that we did that, and I'll show you how to do your risk management if you chose to make this trade. And I'm just doing a simulation. We didn't actually read the articles, right? So we're pretending that we did, and I'm simulating that maybe I want to enter this trade not from the market price, but from a little better price down towards the first support level that I think maybe it'll pull back to. Okay, so I start to say I want to get in at 97,650, which is just above this line I drew. So 97,650. Okay. Execute when price hits. Where would my take profit be? The prediction is it could go to 104 to 111,000. So maybe I say, you know what? I'll be conservative and just say 100,000. Okay, if it goes to 100,000, I make $23,500. Okay, what about my stop loss? Maybe I say, okay, I'll put my stop loss not just below one support level, but below the second one here. And so if it breaks both of those support levels and hits this price, then I'll get out. So 97,214 stop loss as an example. Okay, so now I'm looking at risking 4,360 to try and make 23,500. Well, that's a nice setup. That's a nice ratio. Why is it such a nice ratio? Because I'm waiting for a pullback. I might not get that price. Maybe it just shoots up right now and I don't get in on this trade. And if you were afraid of that, then you could do a market trade as well to buy from the current price. I'm looking at this pullback occurring in the short term and just hoping that it might come towards the first support level, then go up, okay, as an example. So now I can look and say, okay, I've got my technical setup. I know where I want to enter, right here above the support, and where my stop loss will be, and where my take profit will be, which is up to a new all-time high towards 100,000. So I've got my entry prices, exit prices figured out. But maybe I don't like how much I have to risk with the current trade size. So now I need to adjust my trade size to be the amount of risk and potential profit that I want to go after. So maybe I say 0.2 as a trade size. Now I'm risking 872. Maybe I want to risk, 600, which is about 1% of my demo balance here. Okay, my demonstration account. So if I go to 0.15, what am I risking? 654, 0.14. Okay, now I've zeroed in. 0.13 should do it. Now the price is moving as I'm talking, so that doesn't matter though, because it's a pending order, not a market move. Okay, so there I'm at less than 1% risk. Okay, You could have a dollar amount in mind that you know is a certain percent of your balance. So if I know I want to risk around 600, now I've got the right trade size, risking 566 to try and make it over 3,000. So I could put that pending order in and click buy. Okay, why is it a pending order? Because I put it as execute when price hits in the order window. Now I'm all risk managed. I know how much I'm risking. I know what price I'll enter at. It's down here, just above the support level. Okay, right about there. And if it pulls back to that price, I'm in. If it goes down, breaks this support level, breaks the second support level, and hits this line here, well, then I'm out. I risk less than 1% of my balance with that setup, but I could make a lot more than that. Okay, about 5% maybe gain on the account. If it does what that, first of all, the signal says it expects it to rise, and also the articles kind of expect that as well from looking at the headlines. And so now the hope is that this pulls back enough to hit our entry point to buy from. And as it's dropping, you're thinking, wow, I'm glad I didn't make a market move from up here because I'm getting a better entry point if indeed it pulls back to our entry price. Now, if you go to the pending order area, the chart will show the lines of the trade you just set up. So let me go to like 1 hour candles, and now we can see the setup. Okay, here's the stop loss, here's the trigger price. Okay, we see it's coming down towards the trigger price line, and our take profit is up here. We need a bigger candle. Let's try 4 hours to see the take profit price. Okay, here's the take profit right here. Okay, take profit, entry price, which is labeled trigger price, and then my stop loss down below that down here. Now we can click and drag these, by the way. If I left click, I can change the price I want any of these to be set at. Because the trade, even after it opens, I can change the take profit like this. And before it opens, I know not only can change the take profit, but I also can change the trigger price because it hasn't reached it yet. I could say, no, you know what? I could slide this up until it hits the live price and it would open right now. Okay, so it's up to you. You can drag these lines around pre and post trade opening. Obviously, you can't change the open price once it opened, but you can drag the take profit stop loss around still as it's a live trade. Right now, it's in the order section because it hasn't opened yet. I'm waiting for the trigger price to get hit, and then you would find it in the positions area with the same functionalities on the chart. Okay. Okay, so I think this is a good place to stop. We hit the major ideas for today's session and what's happening in the markets. Any questions before I end things or input that you might want to give? I'll pause for a moment. Okay, great. Well, thank you all for attending. I appreciate everybody being in the session today, and good luck with the trading through the day today and the rest of the week. There are some great announcements coming up today and tomorrow that we looked at. And keep an eye maybe on NVIDIA and really the tech sector maybe in general could move right along with NVIDIA depending on how strong its movement is. But it'd be interesting to see the charts on that. And you know, maybe you find something you're interested in today, tomorrow to make some trades on based on one of the strategies or both of the strategies that we went over today. All right, everybody, thank you for joining. Bye for now.